price always needs a sweep for any trade you take. I always say that if there is no sweep, you are the sweep. And
If you cannot see the
it's
liquidity, you are the
yeah,
liquidity. Yeah.
yeah. We have so many different ways to say it,
Yeah.
right? But it's still true. If there's no sweep, then likely the zone that you're trading from, the spot that you're trading from, price is slated to take that out and then go. So what I like to tell people to look out for is at least a low or a high above your POI. And when price
Okay.
sweeps that and manipulates into a certain level of the POI, that's when you should be expecting price to turn around and go the other way. Now, that
Mm.
sweep isn't the only criteria for you to just ape into the trade and
Yes.
go. There's a confirmation that you can find after the sweep, meaning price sweeps the low, trades up above the previous down candle's
It's just
high.
cause and effect.
Yeah,
Yeah.
yeah, that's it. And we take the
Mm.
trade, and it's more of a successful trade
Yeah.
than trying to be a part of something without a sweep.
Okay, I'm in agreement, and I think the things you were mentioning earlier on, as a break of structure and so forth, are symptoms of the sweep. Like
Yeah,
you wouldn't get the sweep without a real
yeah,
fuel to move it.
yeah.
How are you defining or viewing liquidity pools in the market? Because there's a long list. It could be just an M1 build up. It could also be a trend line. It could also be previous day high, previous week high.
Hmm.
When we talk about liquidity, you can get a long list.
Yeah.
And that long list can also mean, well, there's an opportunity on every single one of them. Do you believe every single zone that could be liquidity is worth trading, or do you prioritize a list of a few?
So I would say that I trade as a part of both the generation of liquidity and the sweep of liquidity. So if
Okay.
we're creating that little range below and we're placing some lows there and then price sweeps through those lows and then moves back up again, that's I can trade a part of that generation or I can trade the sweep and run back up above. Now it's looking to seek the
Can
liquidity
I
at the top.
clarify? The generation is trading within the range, or generation
Yes.
is before we go and sweep low and reverse, you will sell it and then buy it
Oh,
after.
no, no, no. I don't believe
Okay,
in the sell to buy to sell.
got it.
I believe in just looking for the thing that you need to see so you don't confuse yourself. Some
Mm.
people, they short here, long there, short here, long there. I mean,
Yeah,
they
ping pong.
yeah, yeah, they trade like a squirrel and they end up getting confused. They get lost on a particular side and now when they go on what they call tilt, now they're
Mm.
trying to just buy as price is going down. They keep buying every low and selling every high as it continues to put in more highs. And I want to avoid that by just knowing exactly what I'm looking for and taking the trade within that. So by generation of liquidity, I mean that we're we're putting in lows, but we're not going below that, right?
Mm.
I understand that closure back up above. When we respect that low, we go back to the high.
I see.
But if we break those lows, what I tend to focus on is if there's a wick to the left, I call it a prominent wick. So you know how I mentioned the rounding that's at the top of it, of the consolidation. When we get that rounding, it usually sends price lower to a prominent wick that's on the left side. This is a wick that stands
Hmm.
out. You can zoom in and zoom out, and you still see that wick clearly. It runs that wick, and then you see an immediate push trading back into the range and now above that range. So that pool of liquidity that's there, sorry, that's what I want people to focus on the
I
most. That
see.
is the highest in probability to be able to trade a continuation
Hmm.
that with whatever trend price is already going in.
When someone is trading on a lower time frame, let's say an M1 execution, and you're fueled by a catalyst, a run of liquidity, and you have plenty of upside targets in a buy scenario, are you targeting resting pools of liquidity above, or is it just market structure based to the next POI? Because let's say you are in a daily time frame zone, then if you're bullish and you're a daily demand, but you entered on M1, you could buy all the way up to a new high on the daily,
Hmm.
meaning you can turn a scalp entry style into a swing outcome
Hmm.
and have an insane risk to reward.
Yeah.
Is this an approach you believe in?
I believe that an advanced trader could very well have that approach, but for the person who doesn't necessarily win trades a lot, or it's very difficult for them to find trades, trying to hold on to an entry that's going all the way to a daily high
Hmm.
when they can't even secure profit consistently, that's something that I tend to teach against. So when it comes to targeting, I tell people to target if there's a prominent wick to the left. Let's say, you get into an M1 reversal, now price is trading higher, it takes out a high. Usually where the trend came from, the impulse that came down, where the trend came from, there's a wick there. If you target the beginning of the wick that's there, a lot of the times you see price hit the beginning of the wick and then retrace. And that retracement can go all the way back to your entry, stop you at a break even, and then actually trade to where it's going. So you want to make sure that if you're a part of the initial reversal, partial somewhere, target something that's within reach, and should price end up coming back down to your entry, stopping you out, and it actually goes, now you have enough mental capital to be able to get back in and continue trading in that direction of wherever price is going. But some people tend to get into a trade, they're up a sizable profit, they give it all back, and that usually causes a spiral for them.